Hi guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra Parekh. With me is Ekta. You guys are tuned into your stocks. And Ekta, it's not looking so good for the market, right? We're pretty much back at the day's low. It's a 1% cut that we are seeing on the Nifty. And a bulk of this pain really coming through from the banks after that initial recovery that we saw early in trade. We're pretty much, back at the low point for the market. It's an over 800-point cut that we are seeing on the bank. So definitely not looking like a good session now.
Hi Pavitra, absolutely. So it seems as though there is some amount of second half selling which is coming in at this point in time. We have the European markets which have opened, so we have foreign investors which are coming into the markets once those markets become more active, and there seems to be this fresh bout of selling pressure which has come through. So the Bank Nifty, as you can see, is down around 2% at the low point of the day. In terms of technicals, we are below the 100-day moving average for the Nifty quite significantly at this point in time. 17,444 is currently where the Nifty is at, and the Sensex is showing a cut of over 500 odd points. This is courtesy in terms of the renewed pressure that we are seeing in a couple of these Adani stocks. But barring that, just look at the kind of result reaction we're seeing for something like a GAIL, which is down around 6.5% at this point in time. So there is, so the market is not, seems to be punishing all of the stocks which have disappointed even a tad bit, say it's in terms of earnings or in terms of news. But more of that in the next 30 odd minutes. A lot of queries lined up as well. Let's introduce our guest this afternoon. We have Vijay Chopra, who is joining in from EnochVentures.com, and Ashish Kyal at CMT at Wave Strategy Advisors, joining in to talk about the technicals. Afternoon, gentlemen. Vijay, before we kick off the queries on the show, just wanted to come to you with regards to this renewed pressure that we're seeing in the markets and the selling pressure that we're seeing in the frontline Adani stocks, such as Adani Enterprises and the others.
Yes, and definitely it is very disheartening to see, the other companies also cracking apart from Adani. Definitely there is a pressure of the Heidenberg research, and secondly, Adani is not able to come up with the right answers, and somehow people are just selling or short selling. So definitely there's a pressure, and due to Adani, because somehow in the last 3 years we saw that Adani Group, grew leaps and bounds, and that's precisely the reason why we saw such high valuations. And somehow the timing of the report was such that the follow-on public offer is not getting subscribed at all. But I think that Nifty is approaching about 17, the 200 DMA. And I think that, whenever an index touches a 200 DMA, around that area, we have a temporary bottom. So I think that the bottom should be somewhere around. Not sure that it's 200 DMA exactly, 17,288 or maybe a bit lower, but I think we are around the corner. And from here, I think that, sane buying is going to increase. FIIs have been selling. This sold more than 5,000 crores of stocks on Friday, and we are seeing that similar pressure today. We really don't know what the number is, but my sense is that the bottom is around the corner, and one should start picking up good stocks post budget. Wait for a day more, let the budget happen, and then probably we can take a call on buying quality top class companies. So it's a good opportunity to binge into good balance sheets, and let's wait for the budget. I think it's just 1 day left, so we should wait for this 1 day or maybe 48 hours, study the budget, and then probably we can get into the best of the best companies because they have already corrected, and there would be a good opportunity to make money in the markets.
All right, so that is the call coming in. Maybe wait for a couple, for a couple of days when we do get the budget, and then you could look at where you want to deploy some fresh money. But let's get to our queries then. We have lots of them coming through. Sharmila Ghadge writes to us from Pune. She holds 50 shares of Indus Towers bought at 160 rupees, and she also has 20 shares of Ambuja Cements which she bought at 460. She wants to know whether she can hold these stocks for the long term. So she is looking at a longer term kind of horizon. Vijay, let me come to you first on Ambuja Cements. Of course, we were just talking about the kind of sell-off that we have seen in the Adani Group companies. Ambuja in itself is down 28% in 3 days. What would the call be on this? So, considering she has a long-term view, do you think that this is okay to still hold for a longer horizon?
Definitely. In Hindi they say that गेहूं के साथ घुन पिस जाता है. So I think that Ambuja, this is a great company. And I don't see any kind of a hot air in this company at all. It is backed by good numbers, good distribution channel, and a fantastic brand, a trusted brand. So I think that this is a time to nibble and average your buying price. So if at all you get it around 340 odd levels, I think it would be a great level to average your cost. And I'm sure, I'm confident that a company like Ambuja would come back very sharply, and we might see 500 odd levels coming again. So this is a time to buy. So if at all you get it around 340, 345, it would be a great level to get into the stock.
Okay, Ashish, what would your thoughts be, considering that you might have seen many cycles of a lot of these stocks correcting or group stocks correcting significantly? In this case, Adani, Ambuja Cements, what would you be advising your clients at this point?
See, if you look at the Adani Group stocks, definitely they are under pressure, and we all know the reasons why they have been falling. And so it's difficult to comment on the Adani stocks. But if you look at Ambuja, I think the selling pressure is because of the other reasons rather than nothing has changed internally to the fundamentals of the goods that they are supplying and things like that. So having said that, I think there is a very important support for Ambuja. If you look at the past historical charts of past when it was around June 2022, it was around these levels, and you are getting the stock again at those levels. I think this is a classic opportunity to accumulate Ambuja Cement at these levels around 340 to 360, because post this headwind, which is going to subside in next 1 to 2 weeks, I think this stock is going to head again back higher towards the level of 480. So these are opportunities. I have seen these kind of cycles when there is a sharp correction in the market because of a specific group of stocks. These are opportunities to possibly buy the ones that are fundamentally strong, inherent to their own cash flows that they generate. And there can be some pressure, so it can consolidate for some time. But I think Ambuja Cement should eventually head back towards that 500 levels.
Okay, so that is both of our guests sounding quite positive on Ambuja Cements. Of course, it has been a rough past 3-4 days because of the kind of pressure that we've seen on all of the Adani Group companies. But this continues to be a good pick for the longer term. She also had a query on Indus Towers that we were talking about, where she's bought it at 160 rupees. So, Ashish, what would you think of Indus Towers? Of course, the news flow on this has also been all over the place. Today, by the way, the stock is up around 7%, but it's seen sharp cuts. There's no taking away from that. So, how would you approach a stock like Indus Towers?
See, in Indus Towers, we have seen 135 as an important support. It bounced back from there, but only if the time horizon to hold the stock is at least for a year or more, then possibly stay in the stock invested. We can expect a target on the upside. The stock can again reach back towards that 180 levels. But if 135 is breached, then be out. So 135 is a very important stop loss for target of 180, but extend your time horizon for more than a year.
Okay, all right. Extend your timeline for more than a year. Indus Towers, that stock is up around 6% in what is a weak and volatile market as well. But let's get to another query. Vaibhav Rawat writes to us from Pune. He holds 85 shares of RBL Bank, which he's bought at around 200, and 100 shares of Minda Corp, which he's bought at around 270. So both mid caps. He's a medium-term investor, and he wants to know what the future prospects of his holdings are at this point. Vijay, let's come to you. RBL Bank as well as Minda Corp, considering the volatility in the markets, what would you recommend? One is a bank, both are mid-cap stocks.
Well, I think that if you look at RBL Bank, I would rate an SBI much higher than RBL. And SBI, mind you, has touched the 200 DMA. So I think that, it's a good time, even if you're making losses, you can make profits in SBI. So you can, shift from RBL Bank to an SBI, which would be a much better strategy. As far as Minda Corp is concerned, I think it's a wonderful company, in the auto ancillary space, and has been doing good. There is also a formation of a golden cross on the charts. So I think that, it's a good time to buy or, just stay invested. Good chances the stock will go up to 260, 270. So just stay calm. These are times when you have to hold good companies. Doesn't matter if they are correcting. But again, to the investors who are already holding, so don't sell quality companies. The market snatches all these, companies from your portfolio, and then you regret when the market comes back. So market will surely come back. This mayhem cannot continue for long. So Minda Corp is a good buy and a good hold.
All right, a good buy and a good hold at current levels. And, this is for someone who's a medium-term, who has a medium-term time horizon. So they can definitely hold on for a while. Ashish, your thoughts on both of these stocks?
See, if you look at Minda Corp, it has a very important support placed at around 185. So possible there is some selling pressure that we have seen over past few days, and this is because of the systematic risk. So as long as 185 is intact, I would suggest to hold on to the stock. We might start seeing a levels of around 230, 225 over the near term. And as far as RBL Bank showed a very good rise from the lower levels of around 75, went to as high as 185. And it is natural after such a huge run up, we will see some kind of a retracement towards 38.2 to 50% of the rise that we saw. And that is what we are seeing right now. So continue to hold on to RBL Bank, but again, maintain a stop loss of around 132, which is a multiple price action support area. So as long as 132 is intact, continue to hold here. We might see a short-term bounce back also in the stock towards 170.
Okay, got that. The next query also comes in, from someone who is looking at the auto packs. Sanchi Mehra writes to us from Gujarat. She holds 10 shares of Maruti, which she bought at 5,080 rupees a piece. She's a medium-term investor and she wants to know what she should do with these investments. Vijay, Maruti actually posted really strong earnings, right? We got a slew of upgrades also after the earnings did come through. So how do you look at this right now? Also, 2023 is expected to be a strong year in the sense that there are a lot of, huge lineup of new launches. You have that SUV which is awaited. So do you think this is a good pick as we get into that kind of time?
Well, for sure, yes. People were talking about, Maruti not getting new models in the market. But this Auto Expo, they have, showcased a lot of good new models, like Jimmy, which they are going to launch very soon. So I think that, even technically, the company has completed the downfall. Fundamentally, they put up a very good show as far as the numbers go. And I think that these numbers are going to be stabler going forward because we do not have that overhang of, chip shortage or some sudden increase in the steel prices or the metal prices, so which are more or less stable. So the input cost would be stable. The companies have upwardly revised most of the prices of all the models, rather all the auto companies. So I don't think it's going to be rolled back anytime soon or at all. So the profitability is going to be stable for Maruti. I think it's a good hold, even a good buy if you get it, a bit lower around 8,400. So Maruti definitely a hold and a good buy around 8,400.
Okay, a good buy around 8,400. That's the word coming in from Vijay on Maruti. But for the markets as well, there's been a bit of a recovery which has taken place for the Bank Nifty, and the intraday chart will tell you so. It's down around 500 points or 1.36%. When we started off the show, it was showing a cut of around 2%. So there's definitely some amount of buying which is taking place at lower levels. But if you want to put the fall into context, we've already fallen 7.5% for the Bank Nifty this month. So it's been a sharp deceleration in terms of the Bank Nifty performance just in the past couple of days. Need to take a short break, but as we do that, here's some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. Catch the most influential, credible, powerful IBLA jury on the 8th of Feb right here on CNBC-TV18. Welcome back. Well, like we mentioned, it's a tad bit of recovery that we've seen in the market. So the Nifty is recovered back above 17,500 as we speak, still down around 74 odd points. Sensex still down around 265 odd points. A couple of sharp result reactions include something like a GAIL, which has reported what has been a weak set of numbers. Revenue is down around 8% on a Q-on-Q basis. Profit is down over 80% on a Q-on-Q basis. We still have our guests with us, Vijay Chopra on the fundamentals, Ashish Kyal on the technicals, here to answer all of your queries. But before we get to that, Vijay, just a quick word on GAIL. Have you studied the numbers? Sharp knock for the stock.
Well, I haven't studied the numbers as yet, but again, I think the sentiment of the market is as such that it's not sparing any good company as well. So no problem at all. Even somebody wants to buy a good company like GAIL at around 90, 92 levels, it's a good buy for the long term. So, but again, the sentiment is as such that people are just, either shorting or selling. So I would say that these are times when you should recognize that, quality companies have to be bought into. So if you get it around 90, 92, it's a good level to buy. Again, wait for a day. I would recommend, don't rush to buy stocks. We really don't know what the budget holds. I hope, and everybody hopes, that it's the last full-blown budget for BJP. So the government is going to be, full support for the economy and the market players, and even there should be something for the retail investors on the table. So let's hope the budget is good. But again, wait for a day or so. Let the budget happen, and then it would be a great opportunity to buy into even a stock like GAIL. So long term, no problem at all in the stock. But again, I would recommend restraint for a day or so, and then probably GAIL would be a good buy around 90.
All right, exercise restraint for a bit, but then, a lot of these stocks, like you mentioned, are available at sharp discounts. And in hindsight, these are always the stocks, and these are the best times to get into names like this, right? But we're going to try to squeeze in one more query before we wind down on the show. Abhinav Sinha writes to us from Chennai. He holds 500 shares of Asian Paints at 150 rupees a share. He is a medium-term investor, and he wants to know whether he should hold or sell. Ashish, let me come to you first on Asian Paints. How do you look at this one? I mean, he's holding it since, I think he said since it was at 150. So if he's held it for that many years, he's definitely been rewarded for it. But you take us through do you think this is one of those companies that you can safely have in your portfolio for a long time?
Yes, absolutely. Because if he's holding from the level of 150, I think he has been invested since 2010 onwards. That was the last time you saw Asian Paint quoting at around 150 level. So first of all, I like to congratulate him for holding it that long and making it a multi-bagger stock from 150 to all the way towards that 3000 levels. And I would suggest to continue to hold on over here. We are seeing some correction over the short term, no doubt about it. But this is the opportunity to possibly average out or buy, not average out, but pyramid and buy more of these kind of stocks. And on the downside, Asian Paint has a very important support at 2550. As long as that is intact, I think the stock is again going to head back towards that 3,200 odd levels on the upside. And from a longer term perspective, this stock has been known for giving the returns to its investors for over the period of a decade or 2 decades if you check the chart. So continue to hold on to this stock. I don't think there is any issue with the stock, and he might see much more higher levels from here.
Okay, all right. So positive on the long term for Asian Paints. Thanks for that, Ashish. But let's move on to a special now. Like we've been telling you, CNBC-TV18 has compiled a list of the top 20 stocks to watch for this year. It's a carefully curated list of companies that warrant a closer look in 2023. Vayishta is now standing by at the big wall with multiplex players on that list.
2022 was marked as a year of consolidation for the media and entertainment sector. Within this space, let's first deep dive into our favorite, the cinema segment, wherein two large players, PVR and Inox, are being merged. Now, why am I keeping these stocks on my radar this year is because this merger could create a multiplex behemoth with an increased bargaining power. The NCLT has already given an approval in January this year, and with only few formalities left, the merger is expected to be completed in Q4 of the ongoing financial year. Now, what synergies could this merger really draw? Inox's advertising revenue per screen is at approximately 33% discount versus that of PVR in the pre-COVID year of FY20. And for the merged entity, expectations are of better yields on advertising, wherein Inox could come on par with PVR, and the combined entity may even command a further premium over the medium term. Additionally, the market share could trend up as the combined entity may gain from smaller chains as well as single screens that have struggled due to COVID-led closures. Management had earlier guided to add approximately 150 to 200 screens every year as a merged entity. Additionally, in terms of ticket prices and spends per head too, Inox could come towards rapid premiumization in line with PVR. And hence, with all the synergies flowing through, the street expects this acquisition to be a big win-win for the films industry and benefit both the players. With a higher positive bias, towards Inox, there is an expectation of approximately 150 crores of synergy benefit on the EBITDA of Inox. So can we expect a multiplex behemoth in 2023? Only time will tell. But let's look at what the street thinks about these stocks. Couple of brokerages, as seen on the screen, have a buy rating with a target price of about 2100 to 2600, though one brokerage does have a sell call as well. While for Inox, the target prices are anywhere in the range of 600 to 760.
Varsha, thanks a lot for getting us all of the details on what this merged entity could really look like, and we will watch for how this really plays out in 2023. Just a standard disclaimer, this is not a stock recommendation from the channel. The CNBC-TV18 editorial team does not advise on trading or investing in the stock market, and any investor or viewer is advised to carry out any necessary diligence on their own through a certified registered financial advisor for any investment decision. Okay, but with that, we do have to wind down on the show with the news that there has been a fair bit of a recovery that has played out. So right now, it's a 0.3% cut that we are seeing on the Nifty. The Nifty Bank has also recovered a lot, but it is still seeing a cut of around 500 points. But from Ekta, me and the entire team, thank you very much for tuning in, and stay tuned because Closing Bell comes up after this short break.